All right, guys, we are back with another video today about interest rates. And I know I've been touching on this a little bit through my previous videos about the housing market and about what to do if you're a first-time home buyer. But in today's video, we're going to be breaking down what the rising interest rates will actually do to your home qualification, how it impacts your purchasing power, how it impacts your monthly payment, and what questions you should be asking of your budget and your loan officer to make sure that you are prepared this next year, as this seems to be our new normal. Now, because I am a licensed loan officer, I do have to disclaim that the information that I'm giving you in this video is not a mortgage quote. I actually got all of the same information that a news outlet would get from Freddie Mac's website, Market Watch. I'm not quoting you from my own system. I'm just giving you information so that you guys can be better prepared for your home searches. But I do really want to disclaim that because this is a video that lots of consumers and lots of, potential other loan officers will watch, and I don't want it to be confused at all. All right, so if you've been watching the news at all, you will have seen headlines that say interest rates are now at a peak for the last 2 years, or the highest they've been since 2020. And I just want to say that just across the board, interest rates in general, even though they have risen in 2022, they're still at overall historical lows when compared to the last 30 years. Now, I don't want to diminish the increase that we've seen the last 2 weeks because it hasn't been fun as a loan officer. I imagine it's not fun as a homeowner. And so it does impact affordability. When you think of higher interest rates, you also have to factor in that home prices have also increased. And so you have rising home values, rising interest rates, and people's purchasing powers are now going down. So if you were to use something like the Freddie Mac interest rate survey as a guide, right, for where interest rates have been, at their bottom, interest rates for a 30-year mortgage got somewhere around 2.25%. That is ridiculously low. I looked I think like a day ago, I want to say, and the average was at 3.49%, so roughly like 3.5%. So that is a 1% increase, right, from the bottom. And I will tell you that if you are a consumer, in order to get an interest rate at the bottom, it's luck, right? It's just like the stock market, right? If you just don't know when the bottom is until you're no longer in the bottom. And so I'm going to advise you that timing the market almost never works out. Now, buying when you are ready, paying attention to your budget, pulling the trigger when it makes sense, right? And holding on to an asset for a long time, that makes sense. But trying to watch the market, read headlines, figure out when you're going to lock in, it helps you. And I want you to be educated about what headlines impact interest rates. But I don't want you to get caught up in the nitty-gritty. If you feel comfortable with the payment and the rate, this is the type of environment where we loan officers advise clients to lock in. Now, you are not my client, right? So I'm not telling you to lock in or not to lock in. I'm saying this is the kind of environment that we would advise you to. So let's get into how an increase in 1% is actually going to change your buying power. So I want to break down how this is going to impact you as a home buyer. And because I just want you to know, things vary depending on your down payment, your credit score, the type of loan that you're qualifying for. It's really hard to give you an exact for your specific scenario. So assuming a $400,000 purchase price and assuming, A+ credit and a conventional loan with 5% down, right? I think it's easy to see how a 1% increase is going to impact a monthly payment. And then the other thing that I want to tell you just straight off the bat is that if you were expecting the same payment terms, so let's say you were hard set on a $1,500 monthly payment, I want you guys to know that on average, a 1% increase in interest rate actually drops your buying power about 10%. So on a $400,000 house, that would actually lower that to a $360,000 house. So again, like I said, this is just general terms. Again, your scenario is specific. You will want to talk to a mortgage advisor, but that's in general how it will impact your buying power. Now, if we were doing just how much does it increase my payment? Well, a $400,000 purchase price, again, like I said, with a 5% down payment, At a 3% rate, the principal and interest payment only, so this does not include taxes, insurance, or mortgage insurance, would be $1,602.10. Now at 3.5%, again for a $400,000 mortgage with 5% down, that principal and interest payment is $1,706.37. That is a $104 increase, right, in the monthly payment, okay? Then a 4% interest rate, again for a $400,000 purchase price with a 5% down, principal and interest payment's going to be $1,814.18. That is a $212 increase over a 3%, right? 13.2% higher increase in monthly payment. Okay, so that is pretty significant, and it is something that is very notable, right, for your home purchase. And when I tell you and give you tactics about reducing debt, right, what I'm going to ask you to do is look in your budget if there is a bill that you could pay off, or at least work on paying off, right, that would make up for that deficit, especially as it pertains to your debt to income ratio, but just so for your overall lifestyle expense, right, that we're not, overdoing it when it comes to housing, right? No one wants to be house poor. All right, so questions to ask your loan officer. 1, how are you monitoring the market? Ask them in questions that will let you know whether or not they know what they're talking about. What's their opinion on inflation? What direction do they see the market going in? What subscriptions or education have they had that helps them make this decision? I will promise you these clarifying questions will let you know whether or not the person that you're working with knows what they're talking about. Working with an inexperienced person in a volatile market can sometimes cost you quite a bit of money if they don't lock you in at the right time or give you the wrong advice. Now, number 2 is timing, right? Do they have the ability to lock in longer than 90 days? And what does that cost you in comparison to waiting, right? Now, it's a little bit hard to predict because the cost of waiting obviously we're not psychics, but they have a general idea for how much it will cost for a lock. And then assuming the interest rates are no more than 0.5% greater, what does that actually look like? And ask them to calculate your break-even point depending on the number of years you plan on living in the property. I will tell you that most people have a mortgage for no longer than 4 years. They either refinance or they sell their property. And so you just don't want to pay heavy costs to lock in an interest rate if it's only going to cost you money in the long run. Last question to ask your loan officer is for them to give you an if this then that scenario. So in this market, because people have set their buying budgets based on lower interest rates, I would ask them to see options for what it would cost to buy a point down, what it would cost at the par rate, and may or may not ask for what it would look like to get a credit. I would also ask for things to do to improve your credit score if you're not already at the 740 and above FICO range. Now, those things are going to have a huge impact on where your interest rate will be. And I will also ask them to do like payment scenarios based on mortgage insurance. Now, a lot of times people hone into mortgage interest rates as the only thing that dictates your monthly payment. But if you're putting anything less than 20% down, mortgage insurance has a huge impact, and sometimes a greater impact to your monthly payment than the rate. And look into your options for what's available to buy it down, buy it out, split it. That actually sometimes can lower your payment and actually compensate for some increase in rate. All right, guys, so this is my best information on the latest with interest rates, how it impacts your affordability, right, or your buying budget, and what questions to ask your loan officers so that you make a smart home purchase. If you guys have any questions whatsoever, don't forget we have a weekly live Wednesdays at 6 p.m. Would love for you to tune in, list your questions below. I try to get to all of them. And until next time, guys, see you on another mortgage video.